Automated trading. I mean, it's the dream, isn't it? You set up a bot, and it just makes money for you while you sleep. But you know what? For so many people, that dream turns into a really, really expensive nightmare. So today we're going to break down the common playbook for disaster and, way more importantly, how you can write a winning one instead.
So picture this guy. Let's call him Jake. He pours weeks into building his bot, he backtests it, and he is ready to watch the profits roll in. But just a few months down the line, 60% of his capital? Poof! Gone. And Jake's story, well, it's not some rare exception. It's a cautionary tale that plays out over and over again. And look, Jake is not an anomaly. A truly staggering 73% of new automated trading accounts lose money. The problem isn't always some genius-level flaw in the strategy. No, it's usually the preventable, almost silly mistakes that even the smartest traders make when they're not careful.
Okay, so you might be thinking, if the failure rate is so ridiculously high, why is everyone still so obsessed with the dream of automation? Well, the truth is, the appeal is powerful, and the trend, it's just undeniable.
Just take a look at this chart. Between 2010 and 2020, the slice of total trading volume handled by algorithms just skyrocketed, from around 20% to over 70%. This isn't some niche strategy for tech geeks anymore. It is the market, and for good reason. Automation gives you speed, it gives you efficiency, and it gives you emotion-free decision-making that we humans, well, we just can't compete with.
But with all that massive growth comes massive risk. So let's pivot from the dream to the harsh reality for a second and look at the mistakes that have collectively cost traders millions upon millions of dollars.
Take a good look at these numbers because they are sobering. Yeah, technical glitches and a poorly designed strategy are costly for sure, but they don't even come close to the top 2 killers on this list. Bad risk management on average will wipe out 52% of an account. But the #1 most devastating mistake by a long shot, look at that top row, is psychological interference, causing an average loss of a jaw-dropping 68%. We're definitely going to circle back to that one. And, you know, it's not always just about simple, honest errors. Algorithms can absolutely be used for shady, manipulative practices like spoofing. That's when you place huge orders you have no intention of ever filling just to fool other people in the market. It's a good reminder that these mistakes aren't always innocent.
So, how do we avoid becoming another statistic? How do we sidestep these traps? It all starts with the foundation, building and, more importantly, testing your strategy the right way before a single real dollar is ever put on the line.
I love this analogy. It's just perfect. So many traders backtest their strategies for clear, sunny skies. You know, they find a nice 6-month bull run where their bot looked like a genius and they call it a day. But a real, robust backtest, it needs to be a flight simulator that throws everything at you. Total chaos, market crashes, insane volatility, emergency landings. That's the only way you'll find out if your strategy can actually fly.
So, rigorous backtesting is absolutely non-negotiable. First, you need at least a decade of historical data. Why? Because you need to see how your bot handles a full economic cycle, not just a 2-year party. Second, test it everywhere. In those crazy bull markets, the painful bear markets, and especially those boring sideways markets where most strategies just bleed out. Third, you have to model real-world costs. Your backtest is totally worthless if it doesn't account for commissions, fees, and slippage. That's the gap between the price you want and the price you actually get. And finally, and this one is critical, avoid what's called curve fitting. That's when you tweak your settings so they perfectly match the past. It'll look beautiful in your test, but it's a guaranteed recipe for disaster in the real world.
And hey, this isn't just a nice theory. The data totally backs it up. A proper disciplined backtesting process can boost performance by up to 30%, and, just as important, it can cut those painful initial losses by 15%. It is your first and most effective line of defense.
All right, so your strategy is solid. It's been through the ringer and it's validated. Now you need the right tech to actually execute it. This is where a lot of brilliant strategies fall flat because of simple technical details. You see, choosing an exchange isn't just about hunting for the lowest fees. When you're running a bot, what really matters is the technical stuff. When the market is going nuts, is that exchange's API going to stay online, or is it going to crash right when you need it most? Is there enough liquidity so you can actually get your orders filled without massive slippage? And is it secure? Believe me, these factors are way more important than saving a few pennies on a commission.
Now, actually, connecting your bot to all these different exchanges, man, it could be a developer's nightmare. Seriously, every single exchange has its own quirky way of doing things. Different data formats, different naming conventions. It is pure chaos. And this is where a tool like the CCXT library is an absolute lifesaver. It's this brilliant open source project that acts like a universal translator, giving you one single standardized way to talk to over 100 different crypto exchanges. It is an incredible piece of software that saves so much time and prevents a ton of errors.
So where do you run your bot? Please don't say your home laptop. A virtual private server, or VPS, is pretty much a must-have. It's a small, private server that lives in the cloud and runs 24/7. This stops your entire strategy from collapsing just because your home internet decided to take a nap or your computer forces a Windows update at the worst possible moment. Okay, we've built the strategy, we've set up the tech. Now we have to confront the single biggest point of failure in this whole equation, the human being sitting at the keyboard.
Right? And this is the great paradox of automated trading. We build these complex systems specifically to take our messy human emotions out of the equation, but it's those exact emotions that cause them to fail more than anything else.
Remember this chart? Psychological interference causes nearly double the damage of a bad strategy. This is what happens when a trader panics after a few losses. They see a little drawdown, they convince themselves the bot is broken, and they start messing with the parameters on the fly. Or worse, they just turn it off completely. Often right before the strategy was about to hit a massive winning streak. They just can't stop themselves from interfering.
You know what drives a lot of this panic? Unrealistic expectations, fueled by social media. People see these flashy screenshots of 50% returns in a month, and they think that's normal. Let's just be super clear. For a professional, successful automated strategy, getting 15 to 25% in a year is considered excellent. Managing your expectations is the #1 key to managing your emotions.
All right, so we've covered the dream, the mistakes, and the 3 crucial parts of our playbook. Let's wrap this all up into a clear, actionable game plan you can use.
So here is your framework. It's simple. First, build it right with that tough flight simulator style backtesting. Second, run it smart with the right tech and the right exchange. And third, and most important, stay human by setting realistic goals and trusting the system you built without your emotional meddling. If you can master these 3 things, you'll dodge 80% of the mistakes that sink almost everyone else.
And I want to leave you with this one last thought. Success in this game, it isn't just about coding a clever entry and exit signal. It's about building the entire framework around it. The rigorous testing, the reliable technology, and most of all, the personal discipline that allows the algorithm to actually do its job. That is the real playbook.